Vivek Gambhir, Managing Director and CEO of Godrej Consumer, joins us now. Good morning, Vivek. Always a pleasure having you with us. There have been some mind-boggling volume numbers posted by everybody. You have done, I guess, okay, your volume growth is 14% compared to expectations of 10 to 12%. Is this to a large extent because of a low base? If you remove the base and adjusted, what may be the annual growth that you can post?
Yeah. Good morning. I think, Lata, as you clearly mentioned, it's very important to look at these numbers from a 2-year CAGR basis, given the low base quarter. So on a 2-year CAGR basis, our numbers were trending closer to an 8% volume growth. Our belief is that on a 2-year CAGR basis, the industry growth would have been around 6% or so. But I think if the current trend continues with improvement in demand, particularly on the rural side of things, our expectation is that demand for the industry as a whole, volume demand should be somewhere between 8 to 10%.
Okay.
And if you add a little bit of price-led growth, which would probably happen in the second half of the year, this could be a year where for the industry, you could see a growth of about 10 to 12%. So certainly things are improving and heading in the right direction.
Just give us a little bit of perspective, since you will be looking at this market for over many years. This CAGR of 6% for the industry and 8% for your company, how does this compare with, say, a slightly longer period, if you looked at probably from 2012 to 2016? What I'm trying to say is there a bounce which is better? Can we expect this to even do better?
So if you look at the period between 2012 to 2015, during that time, volume growth was around about 10% or so.
Okay.
Between 15 and 17, growth had dropped down to 4 to 5%. And also during the early 2011-12, there was a certain amount of higher price-led growth as well, which hasn't happened in the industry. So we still haven't gotten back to the period from, say, 5 years ago. But certainly, I think if we can get to 8 to 10% volume growth, that would be a very positive trend for the industry.
Okay, 8 to 10% overall volume growth. Vivek, hi, good morning. I want to talk about the household insecticide segment, because there the growth rates have been phenomenal for you. And we have seen some competition from startups, from new brands like D&D, etc. But despite that, your growth has been, what, 17% this time. Tell us a little bit about what the innovation pipeline is looking like, what kind of brand investments are you making in the household insecticide segment, and whether you'll be able to sustain this run rate.
We are a market leader in insecticides with over 50% share in the market. And a lot of the growth in this segment is driven by a constant thrust on innovations. And so over the last 2 or 3 months, we've launched some fairly game-changing innovations. We've launched Goodnight Power Chip, we've launched a Green Shakti coil, and we've launched a liquid vaporizer machine with 50% more power. Over the next 2 or 3 months, there are 2 or 3 more innovations planned. Our innovations will straddle all the formats at various price points. Along with the focus on distribution, we feel very confident that we will be able to continue sustaining a share in this category. The big opportunity here is that the rural market is only about 35% penetrated. And so rather than talking about share gains from existing players, the big opportunity for us is to grow the category and develop the market. And that's where all of our efforts are focused on.
Okay. When you were speaking to us about volume, you said you will expect 8 to 10% growth and plus higher EPS or higher earnings, because you will have a little more by way of price increases. You're sure you can push that through? There is enough demand to be able to push price increases, and where will they come? Will they come in oil, soaps, insecticides?
I think we'll have to just, wait and see, because pricing changes depend both in terms of, what our cost situation is and what the competitive environment is, which is why I think in the latter half of the year, we do believe there will be some opportunity to pass on some price increases. Typically, we do this through new innovations, new variants, playing the portfolio in a much more systematic manner. But I think the reality is, Lata, is that if you look at input costs, For us, the two biggest input costs that we worry about are palm oil and crude oil. The palm oil situation is expected to be benign over the next few months, so I don't expect any pricing action on the soaps front. Crude is an indirect variable for us, but it affects a lot of other inputs such as packaging, some other inputs, etc. In that basket, and typically crude affects about 40 to 50% of our cost bar. There we are seeing about a 5 to 8% increase, though we have certain contracts already locked in. But as those prices increase, the first focus will be on trying to get our costs down. But I think if we need to take some selective price increases down the road, we will look at them. The focus in the near term will still be on volume growth. Okay. And we still feel very comfortable that in spite of this inflation in costs, our profit growth for the year should be ahead of revenue growth, and you will see margin expansion from us.
Okay. Now, for that big statement you made with to the analysts, fiscal year 2019 will be most active in terms of new launches. Give us some color on it, or should I say hair color on it?
Across the board, you will see us with launches in insecticides, in personal care, in hair color. And if you look at our track record, we have been the innovation leaders in our categories. And so across the board, while I can't talk specifics, suffice it to say that a lot of our focus will be on some very exciting, game-changing new launches.
Okay, within the soaps and the hair color segment, you've been gaining market share and you've delivered double-digit volume growth. Is a lot of this coming because of aggression in terms of marketing spends? Because that's what we're hearing from a lot of other market participants as well, that the entire sector is now going up on marketing spends. What are your own thoughts on that? What are your own thoughts on that?
See, if you look at our advertising spend last quarter, it was 11.7% of sales. So typically, our advertising spend ranges between 11 to 12%. And I think we are quite comfortable with that. And so our intent, again, is to be very competitive as far as advertising spend is concerned. But, we are not seeing a significant dial-up in trade promotions, for instance. That happened about a year ago. So far, I think a lot of players are investing in brand building and innovations, which I think is the right way to build demand and the categories. Okay.
The only niggling worry is the international business and the little bit of a slowdown that we've seen over there. In fact, this time as well, your constant currency revenue grew just about 7% year on year. I think it's Indonesia that's been a pain point for you. Can you tell us what the prognosis is for the international business?
Indonesia is on a strong path to recovery. Even in the last quarter, our growth rate was 10%, which was far better than most other players in the industry. I think if the current momentum in Indonesia continues, this should be a strong year of recovery for Indonesia. Africa had a slightly softer quarter, primarily driven by a very bad macroeconomic situation in South Africa. West Africa has done well for us. Kenya has been recovering well. So our expectation would be is that the second half for Africa should be much better than the first half of this year. If the Indonesia recovery continues, that should mean a good year for international as well.